Good evening. It is time for today's Tax Talk. I'm your host. I'm attorney Stephen Leahy. It is Wednesday, October 19th, the year of our Lord 2022. And yesterday, the IRS made some IRS adjustments. That's what we're going to talk about today. Won't you join us? So it was yesterday was Crypto Tuesday, so we didn't talk about this yesterday. It was just released yesterday. The IRS came out with the new inflation adjustments, and it's making big news. I got to tell you, they do this every year. There's an adjustment every year. It's usually not big news because it's not the size. It's just not that big. But this year, it's sizable. But here's my opinion: it's not sizable enough. We'll talk about that as we go through Really, I've got a couple stories, but really we're going to look at the source, right? So I have a couple. So let's start. So we go to the IRS.gov, right? So here it is. IRS provides tax inflation adjustments for tax year 2023. So next year. And this was released yesterday, October 18th. So the Internal Revenue Service today announced the tax year 2023 annual inflation adjustments for more than 60 tax provisions, including the tax rate schedules and other changes. Then they provide the details from this revenue procedure, and that's what this is. So here's the tax rates. This is for married couple. So if you don't make over $22,000, you're in a 10% tax rate. So just so we all know, marginal tax rates. My first $10,000, this is married. If I'm married, the first $22,000 is taxed at 10%. Less, remember this is after adjustment for my deductible, the standard deduction, or deductions if I have. But usually, I guess if I'm at $22,000, I'm only taking standard deductions, right? Then the next number from 22 to over 22, but not over 89 is taxed at 12%. 2,200 plus 12% of the excess of 2,200. Over 89, 450, but not over 190, 750, 10,294 plus. See, that's because that's 12%, 10% of that, and 12% of that would come to 10,294 plus 22% of anything over 89,000. So that's how marginal tax rates work. And as you see, as you get, they go up as you go. So it's 10, 12, 22. So a big jump there because that's where most people are going to find themselves. 24, 32, big jump. And then 35, and then 37. So, and again, here it is already. If you're making over $693,750 as a couple, you're starting at $186,601.50, and then add 37% of anything over that. That's how marginal tax rates work. There's a head of household. Head of household is people who are single and have a child or a parent that they're caring for, someone that qualifies as a dependent. And then they have a different tax rates for them, not tax brackets, I should say. A tax rate is a 10%, 12%. A tax bracket is each individual bracket inside there. And then you have the single, right? I thought I had single. This is, it's the next page. Now, there it is. So and then this is for single people. So about half of what it is for married, not all the way down. Because look at this, at married it's $690 or something for a married couple at the high tax bracket, but when it's single, it's $578. So not that much different than single and married. There is a difference, but not much, not that much. So anyway, that's what the tax rates are. If you read there's a story here. Let's go to the. If we read this, the tax filers keep more money in 2023 as IRS shifts brackets. But then the question really comes in: are you really keeping more money? But let's read the story. The IRS on Tuesday announced rule adjustments to account for inflation for 2023, including shifts for tax brackets and the standard deduction. The IRS releases inflation adjustments annually, but this year's announcements come amid heightened economic concerns about high inflation and potential recession. I don't know if it's a potential recession. I believe that we're in recession, according to the definition of what a recession is. I know that the government wants to redefine what a recession is, and many of these journalists are going along with it and saying, "Yeah, let's change the definition." I think that if it was anybody else in the White House, they wouldn't be doing that. My own opinion. The adjustments apply to the 2023 tax year, for which tax returns will generally be filed in 2024. They're aimed at warding off bracket creep. Remember, it wasn't always that way. That when inflation was high in the 80s, they came up with this idea because you were making more money, but you weren't living better, and then you were paying more taxes. And that's kind of what's still happening here. When salary increases aimed at accounting for a higher cost of living end up pushing taxpayers into a higher tax bracket. The standard deduction will increase by $1,800 for married couples filing jointly, and by $1,400 for heads of household, and by $900 for single taxpayers and married taxpayers filing separately. The income thresholds for tax brackets are among the provisions changes of the greatest interest of taxpayers, according to the IRS. The tax rates themselves are unchanged from last year, right? The tax rates are set by Congress, and then they change the bracket. The brackets, I should say, are set by Congress, ranging from 10% to. I'm sorry. The brackets are not set by Congress. The tax rates are set by Congress. The top rate of 37% applies to individual single taxpayers with incomes over $578,125 and married couples filing jointly with over $693,750. Figures up from last year, which was $539,000 and $647,000 respectively. So 40-some, almost a $35,000 difference for married couples. The lowest rate of 10% applies to single taxpayers with income of $11,000 or less, or married couples filing jointly with $22,000 or less, up from last year of $10,275 and so not that less than $500 difference. I shouldn't say that. It's $1,500, a little bit less than that. A single taxpayer making $90,000 in 2022 tax year will face a tax rate of 24%, while the same income in 2023 year will face a top rate of 22%, because that's where the difference changes. Other announced IRS changes also affect the earned income tax credits, estate taxes, and flexible spending accounts, among other provisions. So that's that's their take on it. Again, but here's the problem. That those adjustments are about 7%. But here's the map of inflation, right, from 2010 until now. Well, the latest numbers, do I have the latest numbers? I thought I got the latest numbers. I thought I had the latest numbers. But the latest numbers are about 8.2%. In June, it was 9.6%. So if they're making adjustments of 7%, aren't I still falling behind at least 1%? The answer is yeah. And if inflation keeps going up, aren't I continuing losing? The answer is yes. So here's what I wanted to point out also. Here's the cost of living adjustment for Social Security. This was big news last week or the week before. Social Security and supplemental security income benefits for approximately 70 million Americans will increase by 8.7% in 2023. The 8.7% cost of living adjustment will begin with benefits payable to more than 65 million Social Security beneficiaries in January 2023. Increased payments to more than 7 million beneficiaries will begin on December 30th, 2022. So again, the Social Security cost of living adjustment is 8.7%, but the adjustment for the taxes is only at 7%. So they're touting it like they're doing, and I think that's one reason why they're doing it. We have the election coming. So see, the government's doing something. They're changing the tax rates. Tax brackets, not the tax rates. They're changing the tax brackets. They're giving us, you're going to save money. But we're really not saving any money, are we? The whole purpose of the adjustment is so you're not paying more taxes on the same amount of value that you were receiving, because inflation robs the value, and yet we're really behind still. Why? If they're now one of the problems with the Social Security adjustment is it's going to make it it's going to break that system faster because they're paying out a lot more money. But they're collecting, and I know that it does protect you some, but there's going to be some people that extra 1% would make a big difference. It's actually almost 2%, right? So from 7% to almost 9%. Maybe, those people are being pushed into a new bracket, aren't they? And they're supposed to stop that, but it doesn't stop it completely. Anyway, that's kind of where that's going, and I thought it was interesting. It was an interesting take. We can look at the let's see what else we have here. This is the unearned income for minor children. There's a lot of information in here. It's in the stack on the in the description below. I have it in the stack, so you can go back. You can go look at it if you're interested. Most people don't want to read IRS things. I do. I like to go to the source and find out what's in it, because these stories sometimes skew what's really inside those numbers. As this story from the Hills kind of tells us, oh yeah, tax filers can keep more of their money. No, you can't. You're losing more of your money because of inflation. So I understand their point, but I think the spin is not really what reality is. So anyway, that's kind of what I was thinking. So thanks so much for joining us. Remember that I'm going to ask you to like and subscribe. Let me put the slide up. We need your help. We need to get this information out to more people, and we need your help to do that. So like and subscribe and share, please. And remember, if you have tax problems, if you owe the IRS money, if you have unfiled tax returns, if you think you overpay, you should get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com. That's freeirsbook.com. Get your free copy. I will ask you to pay for the shipping and handling. We pay the printing, you pay the shipping. Seems fair. I'm paying, and I'm going to throw in a bunch of bonuses. The 4 things you can do if you have unfiled tax returns. The 6 things you can do if you have unfiled tax, if you owe the IRS money. What else is in there? The nine ways for tax audits, to avoid a tax audit. You can't really, right? Sometimes you can't avoid a tax audit because they can be randomly generated, but you can reduce the risk. And that's the 9 thing, the red flags that the IRS looks for. I have a couple others, I think, in there, some bonuses. So we're also going to throw in my newsletter, which is back out. We kind of had a hiatus for the COVID, but we started publishing our newsletter again, and we'll put you on the list. Get a copy of the book. You'll be on my monthly newsletter list. So thanks so much for joining us here today. I appreciate it, and we'll see you again tomorrow. Again, thank you so much for joining us. Out.